Okay, let's get into the stock market technical analysis. We're going to use the charts to be our guide, and we got a few things happening today that I definitely want to point out. If you guys are finding value in the content, drop me a thumbs up. If you're interested in the private member group, feel free to join in on that. Link in the description below. Okay, so we have triple Qs. I'm looking at a weekly chart right now. Again, we've had this bullish or this bearish engulfing candle here in place on the weekly, and that has held as the top. Right now, though, that's being negated, and depending on where we close today, it's going to basically negate that as a topping stick. I don't, unless they sell this thing hard in the next 30 minutes, which is probably not likely, then it's going to negate this as a topping stick. You can see there we're closing above on the weekly, so that's basically it. I mean, you can't say that we are at a top when that bearish engulfing has been taken out. So, yeah, again, I talked about recently just kind of starter short positions because we still needed to. There was still a few things that needed to take place in the charts, and so a starter short made sense, but didn't make sense to be super heavy. And as of right now, unless you get a big sell-off into the close, it doesn't necessarily make sense to really keep those short positions. I think it probably makes sense to cover those and look for the next opportunity. Now, this is a weekly chart. We are, going to push up and put in a new high on the weekly. Still negative divergence. It's literally just kind of the same thing. You can see we basically are just extending the divergence on the weekly chart. Now, again, divergence on the weekly doesn't mean, it's time to short. Just because you have divergence, you do need to break down from key levels. So I guess what the chart wants to do, and here's what it kind of tells me. We've got this bearish engulfing pattern. That's still a clean bearish engulfing pattern that tells us we should break down, but it looks like we're going to back test. Again, the buy the dip crowd is, they continue to just kind of repeat. And so we did break down from that pattern, and it does send us down to this area, but it looks like maybe they want to come in for a back test of that wedge before actually breaking down. So that would signal some more upside up to that resistance level, which is basically from where we're at now up to that. It's about 2%, 2-3% more upside before we hit kind of that resistance, and then it should sell down. That's kind of what I see. So, if you want to be long, feel free to be long, because days like today, especially when we're going to looks like we're going to close at a new high, the bulls just get really emboldened and they think we'll never go down, and that's fine. Ideally, I want to short when we break support, or I want to short at resistance. I'm not interested in going long as we have negative divergence that's been building, and we've broken down from this pattern. So from my perspective, I'd rather short the backtest of resistance for a push down to the 200 days versus go long for a 3% rise, because there's no guarantee we're going to get that. All right. And again, there's no guarantee we're going to fall. There's only risk reward ratio. And so the upside I see limited to about 2.5-3%. And the downside from right here would be about a 10% to that target. So the risk reward ratio is actually more favorable to the downside, and that's kind of how I'm looking at it. Let me drop down to the daily chart. We'll see what we got going on here. So you can see here, it's very likely we're probably going to pop up, put in a new divergent high. There will still be negative divergence on the daily chart, so that will still remain, and it will likely get sold into. Doesn't mean it can't, hold up there for a few days, but we're so close. The algos typically are going to try to run stops, and all the stops, like if you're shorting, you probably shorted that bearish engulfing, and as they're popping it above there, it technically makes sense to cover your short. So that's what, the algos will run up and get everybody to cover the shorts, run all the stops, and then they'll reverse. So, I think it just makes sense to probably throw away those short trades, look for the next sell signal, which I do believe will come soon. If I drop down to the hourly chart, you can see here, even on the hourly, we're kind of walking up this little trend line right here. And until that breaks, there's no sell signal. So we need to see that break. And that's about it, really. That's really all I have. So, yep, moving on from that one. Meta, same thing. Again, I was expecting it to break down, but they continue to kind of hold it up here. So what I'm going to wait for on this one before jumping back in short is I'm going to wait for a sell signal, which would be like a bearish engulfing candle, a doji, some sort of reversal, maybe take out some of these supports. We just don't have that yet. They continue to kind of push this and float this higher. So it can go higher. There's nothing that says it can't go higher. So no reason to kind of remain short on that. And so we'll just throw that one away. And then NVIDIA could be a short, but probably not today. They're likely going to close it. The problem with NVIDIA, we're back into that range. This range that I talked about here, we're kind of in the middle of it. And I figured if we got up here, started getting daily closes up in here, they're going to push it up to the high and probably make a new high. I'd say there's a good chance there. So that's kind of the way I'm leaning. Until I see a reversal, I'd be leaning more towards pushing up and putting in a new divergent high on NVIDIA before reversing down. So yeah, I mean, if you wanted to, you could take the long. You've got some support right there, and with a stop below would make sense. The S&P 500, there's really no change today. I mean, most of the rally is in tech today and a little bit in the financials, but mostly tech. No change there, but again, there's no real sell signal either. So they're so close to the highs, they're probably at least minimum going to pop it up there and run some stops. So with tech holding, you really have to see tech starting to break down for the SPY to break down. Just with the weighting of the market, the SPY's not going to sell off too far unless tech is breaking down. So that's kind of critical. Eli Lily selling off today. This one's kind of back down at what could be support. You've got some reactions here. You're just back at that trend line. However, and we're above the 200-day, but it's right on it. We're basically just sitting right there. So, it's either this is a false breakout and they just kind of pop it up there and then they're going to run it back down. That's the way I'm leaning. If you look at the hourly chart, on the hourly, and I talked about this price action right here. Let me kind of clean this chart up. Above that is divergence, negative divergence right there. So you've got basically higher highs in price, but diverging lower. So I'd lean towards some false breakout at this point. Gold miners, big reversal candlesticks in the gold miners today. So GDX, you can see we do have a bearish engulfing candle here. No real negative divergence on the daily chart. So I'm not exactly sure. It could just be a minor pullback on these, maybe a correction, but definitely bearish engulfing. So I'd probably put GDX down to at least $40, and then that's probably about as much room as I'd be willing to give it. But then I'm looking across more of the gold miners and definitely seeing more opportunity for some more downside. There's just big reversal candlesticks kind of across the board. So yeah, more downside, although, I don't think it's necessarily a trend change. To me, it looks like more like a correction in an ongoing up move. Wheat and commodities in general. Wheat breaking out today. Big gap up in the overnight session, gapping above this kind of former resistance. And then they just bid it up right through the 200-day like it's not even there. So continued long side bias there on wheat. This still looks good. And again, I think we've started the next trend up in wheat. If I roll out and look at kind of the longer term time frame, we basically hit pretty decent long-term support right here at about 487. And if you roll out, we undercut it just barely. But that undercut was bullish divergence. All right, that's the bullish divergence I've been talking about. And so tells me that was a bear trap. And so that's kind of energy for more upside. So definitely looking for continuation on the upside of wheat. And then ag inputs like MOS continues to look good. Look at this one. It's relatively objective to go long even right here. You can see here, big bullish falling wedge, bullish divergence telling us that, okay, momentum is likely is changing, and you had the breakout, and we've just been backtesting for about a week, really, But again, the buyers continue to just buy support, and that's what I've been doing, is adding to my position on support. And so yeah, I think we're good. I mean, this also could be a bull flag. You've kind of got a flagpole, and then we flagged out, and a continuation sends us up to about 32.38 for that move. So yeah, that's what I've got, is probably a strong push up there, and then should get a pullback up there. Final target for this trade, a trend trade, is all the way up here at 41.75, right in there. That's the widest part of the wedge of this pattern, and so that is your major target. So yeah, still looks good. BlackRock and really the regional banks still look like good shorts. I don't see any reason to really take those off. BLK, you've got uptrend, broken trend, hit support, bounce. There's a perfect back test, and down we go. So again, I think you're likely heading down to the 200. They should buy it there, but at that point, you will be making lower lows and starting those lower highs. So starting that downtrend. So next target is the 200-day moving average. Right now it's about 910 on that one. And then KRE, again, this one's not impulsively selling off, but it's still below trend. So you've got support, broke trend, back tested for a while, kind of drifting sideways. Not an impulsive sell yet. So I would like to see that for sure. It's not going up, it's not going down, kind of drifting sideways. So looking for that breakdown, that impulsive sell to help confirm. And then if we do get that, should head down to the 200-day. They'll likely try to buy it there. Okay, I better get this video out, try to get it out before the market closes in case there's any positioning or any things you guys want to change. And I will catch you guys on the next one.